get lucky today. For once, we're not the only people with the issues. Oh no, it just went up, yeah. But for once it works and we're not affected by it. How about that? The tide is turning in our favor, man. After all these years, man, this is it right here. Welcome to success. That's what that is. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? I hear that there are some widespread outages on YouTube out there, and so maybe a few less people join us today, but everything's working good for us. It looks right, man. So we're going to go through everything like we normally do, and then I'll stick around and answer questions for you at the end, and yeah, man. Well, let's see how this goes. Not bad. Yeah, everything's working. Hey, we're financial advisors here at Jazz Wealth. Soon to be getting new shirts, I hope. Where'd we land on that? Anybody? Man, I woke up today, I didn't have any shirts. I'm like, I've got to represent the brand. What's up? I had no shirts. They're all raggedy because I've had them for 4 years. And people keep telling me they're going to order shirts, man. I appreciate it. Appreciate the guy that actually emailed and said, hey, you need a quote on shirts? We do shirts, so maybe we can make this a small world here and help somebody out at the same time. Anyways, we're here to talk about the stock market, not our shirts, and kind of a gnarly day, right? If you're going to use that 80s surfer slang there. Let's just take a look. Here, off to the left side of your screen there, you got the charts. We actually started the day after the inflation numbers with a bit of a rally there, and I don't know why, but people basically thought, all right, 8.5% inflation, yeah, it's got to be the highest, right? There's just no more. It can't possibly be higher. So the stock market was actually quite a bit higher to start the day. And then if we look at the sort of minute-to-minute performance, right? Here's right when the inflation numbers came out, pre-market, 8:30 a.m. Eastern time this morning. Bam, everybody's excited, a little pullback, and yay, we're excited. That's it. Inflation has peaked out. I don't know why we would have thought that. All the headlines are like, and traders expect inflation to peak out, and that's the end of it, so everybody's happy. And then it started fading, and the headlines changed to investors a little bit bearish as they digest the inflation numbers there. So kudos to financial media for changing that, because throughout the day, it got worse and worse. Little bounce at the end of the day, but really a complete reversal day in many of the stocks that are out there. If you're looking at the S&P 500 today, the big names, I've been talking about the big names here recently. Microsoft, gap up, reversal. Never a good sign, right? You don't like to see those things. NVIDIA, gap up, reversal. So everybody that bet on that bottom woke up this morning and said, yes, we got the bottom, myself included. And then all of a sudden, it just faded more and more and more. Now, Apple didn't actually fade too much. I think if the market was open a little longer, it probably would have, but it managed to hang on to some gains for the day. I believe Tesla did too. Yeah, a slight gain there, 1%. That's pretty impressive for considering the day. You got Broadcom in some of the semiconductor areas. We didn't see that broad sell-off. So if you're looking at the SMH, this is just a way to look at all the semiconductors together. Yes, it did close the day down, but there were some names that held on here. So if I go over to QCOM, it's not pretty, but you got a slight gain on the day. You got Texas Instruments coming up with earnings here soon. Slight gain on the day. I said Broadcom a second ago, NXPI Semiconductors, ADI, Analog Devices, slight gain, although it gave back a lot of their day's gains there. So other than that, you had a lot of the same thing. Gap up, reversal, no matter where you look. Now, interestingly, what stayed strong today? Well, look at that. Coca-Cola hitting new highs. For that matter, Pepsi almost hitting new highs, but staying strong. Altria, well, wonder what area these companies lay in here. Target gave you a small gain on the day. Colgate, these aren't exciting names, by the way, but they're higher. Consumer staples, right? The new highs list today, consumer staples. Looking at some of the retail stocks that are normally discounted retailers, they got the exciting the gains today. Why would that be? The discounted retailers, man, maybe people are going to go buy discounted stuff because the economy is in a late cycle and maybe showing a little bit of weakness there. Dollar General, we'll come back to some of these, but they had good days and barely budged when the market started selling off throughout the day. So kind of interesting there. You could look at the cereal makers there. Kellogg, that's almost, I'd hit new highs at one point. But it's that same concept there. And so as we look around at the stock market, the econ news that came out today, inflation's no longer funny. For a while there, it was like, not inflation. You're going to buy a new car in this economy? I don't know. And so it was a joke. It's no longer funny. We have CPI, which is the way we measure inflation, Consumer Price Index, came in at 8.5%. And don't just shake that off like, oh, it's 8.5%. Well, that's better than 10. That's an 8.5% gain compared to this time last year, right? That puts us at 8.5%. So it's not a matter of, well, inflation's at 8.5%. No, it grew. That's it. It's already grown 8.5% in just the last year. And the really bad news about this, if there is some bad news, is that the Fed meets in May. There won't be another CPI report before the Fed meets. So this gives the Fed all the ammunition they need to say, remember that 50 basis point rate hike we were going to do? Well, now we have the ammunition to do it. Inflation's high. We said we would do anything to bring down inflation. And until the stock market starts respecting the fact that the Fed is going to come over and do that, you have a recipe for the Fed to get more and more and more aggressive, right? So that's kind of interesting to me there because, the Fed is just dying to raise rates. Now, they say, well, inflation, this is all Putin's fault. Well, that's not true. February 24th, right? So you got February 24th right in here on the chart. Was inflation considerably higher before that or not? Yeah, you could say, all right, let's go back to the beginning of the year because there was all this buildup of talk of, they were doing some training exercises on the border of Ukraine and everything. So let's give it this area here. Okay, that's rather sharp. But we had already started increasing. And it's not Biden's fault. It's not, Washington's fault. It's not Trump's fault, right? It's our fault because we came out of the recession, the COVID lockdown, and we went and bought the devil out of stuff because we actually had money that was given to us, presumably for free. And so that's what's happening here. We all have to just stop buying stuff for a while there. But you can't blame it on Putin. You can blame it on energy here recently. But you can't blame it on Ukraine entirely, right? So that's it gives you a political advantage. I would do it too, to be honest. But yeah, that's not entirely accurate. Also, let's take a look. One last thing here. So here is the actual numbers from the BLS. If you want to see the actual inflation change, and I want you to notice something here because I'm not just showing you numbers for fun. I don't like that. So food, which makes up 13% of the inflation numbers. Food at home, 10% higher. That's a big number. Food at home. Think about that. What was food at home? That was everything we just talked about earlier. That was a lot of Coca-Cola. That was a lot of Pepsi. That was a lot of Mondelez in there, right? The stocks that have been higher, the consumer staple stocks. You look at flour, cereals, all double-digit returns there. Come down to fresh biscuits and muffins. That's a shame, right? Up 10% there. Other bakery products, your sweet rolls, crackers, breads. These are staples. These are not like luxury cars, right? Nobody feels bad for people when they have to pay more for luxury cars, right? It's like, you got the money, go have a good time. But we're talking about meat, double-digit inflation, beef, ground beef, veal, if that's your thing, pork, bacon, for God's sake, 16% higher on bacon. This is the latest numbers here. Ham, Frankfurters, I remember talking about, there's actually a little deal there still in your Frankfurters there. Chicken, double digits, fresh seafood, everything that you would normally survive on is now double-digit rates of inflation. Milk and all that other stuff there. People are foregoing ice cream apparently because inflation not too high there, but we're going for milk. How does that make sense, right? You need milk for ice cream. Fresh fruits and vegetables. Look at that. We're saying, all right, I'm not going to need the bananas. I got to go buy some meat, right? I need some actual protein here. Potatoes. We're giving up on the starches there. That's what I wanted to point out here is canned vegetables, things that the lower to mid-level income people in the United States need is where inflation is getting hit. So that's why when you start going, well, what's going on? Let's look at consumer staples. I'll use the XLP. Why is that so strong? That's the inflation. That's where the numbers are. That's where people realize you're going to buy that anyways, which means they have pricing power, everything that we talked about, which means they can raise prices as need be, and you're still going to buy it. That's where investors want to park their money right now, which is a real shame because that's, unfortunately costing all of us a lot more money. But that's what we're working with. So I'm going to get rid of that. We're going to pretend like we never saw that inflation. Oh my God. Butter, margarine, salad dressing. That's incredible. Soup. I mean, we could just go on and on. Snacks. Oh, we're not going for the snacks as much there. Baby food up 10%. Consumer staples. That's where all the money is going at the moment. Anyways, we covered the S&P here for just the moment, showing what's happened, the reversal here today. All signs would point to more weakness going forward. Be hard to decide that you're the one that's going to buy that tomorrow unless there's a massive gap up, and even then you're going to kind of question it still. So it's again, remains a tough time to put new money to work. You got oil also higher on the day, a very sharp rally here. We're trying to do, Congress is trying to do what they can. They say they're trying to do what they can to lower the price of oil. A lot of weird stuff happening there with how it makes sense to import, and that's less carbon sensitive. And I don't get into that, but nonetheless, they're trying and it's not working. The price of oil moving higher by 7% today. You got oil inventory numbers coming out tomorrow, and we're about ready to get into the summer season where oil is typically, or gas is typically more expensive anyway. So good luck there. That's going to be a rough one. If you look at gold, finally moving outside of its range here, this has been a very choppy, sleepy kind of area to be, but trying. If you look at bonds, hyper extended. We covered this yesterday, off the chart. You could barely see everything here. Starting to recover a little bit. Now, using the TLT, remember, this is not short-term bonds, right? So it's a little bit different here, but even that one trying to recover here. So looking forward to maybe seeing a bounce in that one over the next couple of days. And that's pretty much it market-wise if you're looking around. Now, office trades here today. We don't do the live show on Tuesdays, but I did close out Carmax. So Carmax was the play where I basically had just kind of thought to myself, I drive by Carmax and every lot is filled up, every little parking spot. Plus, they have cars in the driveways of the lots, 2 deep, not just one. And I was like, they may have a good earnings report, but they are likely going to mention something about inventory. And so we'll talk about that here in just a second. That's the only thing that I did there. New highs and lows for the day. You got 24 new highs, energy and consumer staples, right? Dollar Tree is another one that hit new highs today. Hershey, right? Going to buy your chocolate no matter what. And then in the energy space, Devon, I just thought that was kind of interesting. Almost broke out to new highs and held it. So that might be one that's got a little bit more strength here in the short term, but that's where all the new highs were. New lows were the weak tech stocks that were already weak, and semiconductors that didn't play along today. Applied Materials was one of them, getting nice and extended here if you like the semiconductors. And Lam Research, LRCX, is one of the weaker ones more broadly or over the longer term. And that one did just hit new 52-week lows today. So strength today came from energy and consumer staples. Consumer staples have been on that list every day for the last 2 weeks. And energy, of course, is a strong day in oil. And your weakness was tech, and in particular, semiconductors. You could look at something like AMD, although that wasn't 52-week lows, also weak there. Microchip, if you like the idea of extended sell-offs, that's what you basically are looking in that area. So kind of cool there. And we'll cover more of that on the office trades tomorrow. If you want to join us, jazzwealth.com/research. It's $13 a month. You can join us, and all proceeds go to support Drum Corps International, something that is getting ready to get started again. Super excited about that. It's going to be a fun summer. Anyways, stocks in the news. Here we go. And then we'll get through this here. All right, Carmax. I'm going to stop on this here for a second because Carmax, I've been saying this now. They've got some things going on there. They're one of the largest U.S. Retail sellers of used vehicles, right? It's about 4% of the total market cap for cars that are 0 to 10 years old. So they're selling those just off-lease type vehicles there. Now, I was reading through the earnings, they bought 324,000 vehicles from consumers. That's 69% more than they bought last year. That's a lot of cars, right? They said, look, we began to see some pressure after the holidays, and that did continue through the end of the quarter. One of the reasons was consumer confidence. Another reason was vehicle prices being too high. And the big one was lapping stimulus payments. Their quotes, not mine. The fact that people didn't have free money in their pocket anymore to go pay up for these cars here was kind of interesting to hear that. Now, I thought their inventories would be a little bit higher, and it turns out inventory levels rose by 62%, meaning current inventory, not cars that they're just throwing, they bring it in, they sell it. They bring it in, they sell it. Inventory on the books right now, $5.1 billion. That tells you that prices of used cars likely going to continue to roll over. Showed you that a couple weeks ago. It shows you that the overall sale of used cars it's drying up, right? It's getting to be a little bit tough out there. Also, they said more people were choosing to use financing than cash, which was different for them. People had the cash. They were going out and doing it there. Used vehicle sales declined by 5%. Used vehicle revenues were up. So they got to charge more for less cars there. Now look at this. This is cool. Their gross profit. So if you've ever wondered for Carmax what they make, right? It's a public company. You can look it up. So on a car, their gross profit per retail unit, because they also sell wholesale, gross profit per retail unit was up by $109 year over year. They made an average of $2,195 in gross profit per retail vehicle. And per wholesale vehicle, that rose as well. They made an average profit of $1,191. Right? So if you ever wonder, you go to Carmax and you're like, man, they don't negotiate on a price or anything. They made $21.95 off of you, right? And that $195 was like the Carmax fee or something. So they made $2,000, right? To sell you a car in 10 minutes or have it delivered to your house or whatever. So I thought that was really interesting, but still, inventory levels up 62.3%. Drive by a Carmax and see how many freaking cars they have there, because that $5.1 billion, that's not a lie. That's in their numbers. That was impressive. I had to dig into it and see, just because I had that 1 day trade there. It was a quick little profit, and I will learn a lesson and probably never do that again. So Netflix, a little bit lower on the day. Netflix says, Truist has an analyst for Netflix there, and also I think Cowen as well as the other one. Cowen was the main one that got all the attention. Lowered their price target there, and they said they're going to have less subscribers. So they have a forecast for how many subscribers they think they're going to have. They lowered that in general. I did not look into the details of it. You got American Airlines in the news. They said, you know what? Our first quarter overall revenues, which are about to be released when they talk about earnings here, they're probably going to be a little bit higher than forecast. They were just getting ahead of the news there. Stock's up 1% on that news, so that makes earnings a little bit more difficult if you're trying to play for direction there. Apple, Shanghai, really weird, but in Shanghai they've shut down, which is a huge financial center of the world, and they shut down one of their production facilities there because of the lockdowns. Nobody can't go to work, right? So I don't know what's going on over there, but nonetheless, that affects Apple, and the stock was able to shake that off on the day. Rather impressive, given that news. What else do we have? Not much else. Alibaba down about 1.7% on the day. The Daily Journal is a big stakeholder in the company, and they have reduced their position by like 50%. It was some large number there, and they're basically giving up on the stock here little by little. Etsy in the news. Apparently, let's see. Etsy, so down about 3.5% on the day. The Etsy sellers plan to temporarily halt sales in protest of the higher selling fees from the company. I heard about the higher selling fees, but I did not hear about the protest, and Etsy's got to do something about that. Now, that's the equivalent of them raising prices. So they have increased costs too, and so the sellers on Etsy are like, whoa. Oh, don't not play this game here, man. I'm not doing that. Tomorrow you have earnings. Well, we talked about I showed you the slide from yesterday. If you're curious, do we still have it up? Don't still have it up. You got earnings from Bed Bath & Beyond, BlackRock. The financials going to continue to report there. You got Delta Airlines, JP Morgan, and Fastenal. Fastenal is a good indication of the industrial sector there, so we'll keep an eye on, see what happens there. And that's about all I got for you. I will take your questions and see what I can do. Otherwise, I will get out of the way here. Yep. Cybertruck. How many of you are Cybertruck people, huh? I'm one of those that was like, I don't get it. Like, if it's different, right? But if you have to sell a lot of them, why not just go with the design that's kind of like everybody else? You know, it kind of looked like a Toyota Tundra. Why couldn't we just go with that? They could have sold millions of those things. The Cybertruck, it's cute. You know, it's not my thing though. Yep. Carmax, Carvana usually trade in line with each other. Is that true? Do they correlate that well? I don't know. Well, Carvana would be up next. We got still about another month. What is that? 5 weeks until they report earnings there, but it gives you an indication of that. Carvana's a little harder to see inventory because you got to do that online, so I wouldn't know about them as much. Yeah. Is that why 440 ships are sitting in Shanghai? That would be why that place is a desert, right? They're putting tape on the doors. I saw a TikTok of them, people coming around taping the doors, making sure you don't go out and stuff. I mean, it's a different world. I'm not saying that's right or wrong, but imagine that here. And I heard Philadelphia, you guys going back to the mask mandate? I feel bad for you guys. Here in Florida, it's like, there's no virus. We don't talk about the virus. I don't know what's happening around the rest of the world, but yeah. Market access, even more extended. Yep. Problem is I can't do anything with it. I like market access to play for a bounce there, but I can't do anything with it because the option market spreads are like $5 or more. Yep. Yep. Giovanni saying Hasbro, more downside. Well, you would think so. All right, so here's Hasbro here. They're going to have earnings coming up towards the end of earnings season here, but no real attempt at a bounce that's lasted more than 2 days, right? 3 days I'll give you. That's a tough one there. I don't know that I'd be interested in picking on it. I'd like to see it bounce first and try to pay up a little bit for it just to feel like I didn't try to guess the bottom if you're looking for like a short-term trade there. Yeah. Chris get a Tesla, but he ain't looking at that Cybertruck. No. I've been looking for, you guys can hate me for this, but my car, I drive a 1941 Ford truck, and I thought, well, if I could find like a wrecked Model 3 or something and take those motors out of it, that'd be kind of fun. You have like a 1941 electric truck. I know that's like blasphemy, but you know, it's what it is. Worth a try. Someone's going to do it eventually. Defensive stocks are high. Everything else probably lower. Where's the swing trader to go? You're right. Defensive stocks are tough to chase right now. And as a swing trader, is that where you really want to play? There's not a lot to do over there. So you got to look at semiconductors. You got to take your shot maybe on big tech with the higher volatility at the moment. Maybe some financials because they were all lower today. Only the credit card processors were higher today. Capital One and Discover, right? Is that today or was that another day? Yeah, it was today. It's small gains, but out of the financials, they were the only ones that held up today. Synchrony was another one there. And the insurers are still looking all right, though. I mean, that's something there. Hartford Insurance, maybe. Oh, you guys are just filled with comments here today. Yeah. Oh, man. Grocery stores down. Albertsons, Kroger look like analysts thinking they can no longer beat inflation. Yeah, and they've had a good run too, by the way. So how do you justify that price increasing with now the new inflation numbers coming out? All right, but what are you going to do? Why do you like SoFi? People have been talking about SoFi since it was $20. People loading up below $20. Now it's at $7. I like the company. The stock has been a disaster because they're spending money to grow in a million different directions, and that's the tough part. It's like DraftKings, right? How can you get excited about DraftKings until they stabilize a little bit? They want to be the number one place to go. And great, maybe they will be, but it requires a lot of money. SoFi is doing the same thing, spending money like crazy to grow in every avenue of your wallet, and they've got to get through that. Now, ideally, they would have done this 5 years ago so that they could spend money into a rising economy and growing market and everything, but they're still going, and I like that. But yeah, it's a tough one to hold on to when you're investing in a company that says every dollar that comes in is going right back out. And then some, right? Because they're operating at a small loss at the moment. But that's got to be maybe a long-term focus. But I don't know that that's the entry price. I'm just saying. 49 Chevy. All right. Now we're talking. We're on the same page. I know electric vehicles have their history, but it's just in this area. Remember, I'm in Florida. So you drive an older truck, you get attention. It's loud, it's clean when I wash it, and so people get attention. If I turned it to electric, I might attract the wrong type of attention down here in Florida. That might work in California, but we live in a very regional country right now, so it's we got to keep the respect there. Yeah. Unusual call activity in Tesla stock. It's time to fight back. It doesn't matter what I say, Harry, does it? Is that going to change your mind? It doesn't matter. You're a Tesla bull either way. You think the loans are hurting there for SoFi? Yeah, could be. Could be. Loans are hurting all across the board. You're starting to see that in financials where there is less interest in loans, especially in the home loans right now. Massive drop off in refis. I mean, you get it, right? If you're going to double more than 100% the rate, you might take a second to think about it. Yeah. Oh, yeah. I think M1 is trying to do the Robinhood thing, too, where they self-clear. And that's no small undertaking there. I'm not sure if that was them. I'm pretty sure that was them when I read that. But, right now they use Apex. And so to be a self-clearing firm, you have to build all that technology and you got to prove yourself and all that. Put up a whole lot of money. I think the minimum is $20 million. So if that's truly what they're doing, then that would explain some of their headaches. That's a massive undertaking. I mean, you give Robinhood a hard time. At least they did it. I mean, that is small. You think we'll see new lows in the market? I'd be cool with that. I don't know. Today was kind of erasing or trying to erase that 50% area. So when you look at where we'd pulled back from relative to the high and this most recent low, we're still in that guessing game area, right? It's a perfect tug of war right now because some people are pessimists and some people are optimists or forever optimists. And so right now they both have a valid argument. It's one of the toughest places to start a new position because you don't have other people believing the same thing. That's tough. For example, if you have the semiconductors, what was one of them? I think the Lam Research was the weakest one. Yeah. So you have these selling off, and at some point, more and more people, more than 50%, start going, well, it may be not worth 460, but maybe it's worth 450. And as it gets extended, people go, well, that's a discount. And I don't know if this is the bottom, but I know that's a discount, and I want to be involved in that. And so you get more and more attraction. When you're stuck at that 50% level, that's a tough spot to get more attention. You can kind of see it here. People took their shot, failed. That's a little less than 50%, but you get what I'm saying there. Apex should go public. Maybe. I don't know where the growth is for them, but I mean, where's the growth for Interactive Brokers, I guess. So yeah, I mean, I guess they could. I don't know what their deal is there. A long time ago, they used to be called Penson, and a little fun fact, Penson was known for being a little loose with the margin requirements there. And the day traders had a field day with that. They got in trouble and they had to take that away. Used to be at Penson, you could say, I would like 100-to-1 leverage, please. And you could get it. And the deal was you just had to have the money back by the end of the day. So they got to a point where it was just out of control, especially during the financial crisis. It was like, can I get 500 times leverage? Where normally a margin account's 2 times. And they just kind of let it slide there. So they had to rebrand themselves a little bit, get away from that. Selling volume slowed at the end of the day on the semis. Well, that's good news. Cool. The Fed and your trend are your friend. Yeah, that's one way to say it. It is impossible to fight an unlimited supply of money and effort. Yep. Apex does clear for most of these app-based brokerages. Yep. Know quite a few people there at Apex. And that's been a consideration for us in the past, but never pulled the trigger. Anyways, that's all I got. I'll wrap it up there, let you guys get back to your life. I'm going to get back to work. We will be back tomorrow to do our office trades at about 12:15 every day, or every Wednesday. And maybe we'll see you there. If not, we'll see you on the closing beat later tomorrow. Enjoy the rest of your day. That's it. See ya.